Hello everyone, welcome to SD Stock Trading. So yesterday we talked about in a video about XLK. So XLK is a technology spider for S&P 500 ETFs, the tracking equal weight spider, which is for all the technology stock or most of the technology stocks, and we made the case that why we think that by next year around August we're going to see another bottom, revisiting the previous the trend line that started back in COVID low, from the COVID low, and made a correction earlier. So that trend 2018 and COVID low, and now we're going to revisit that if we have a soft landing. But in case we have a very like a hard landing, then the technology sector will see even further down, so another close to 30% down from the current level, whereas another 15% down from the current level in case of a soft landing. So that was the case, the bear case for XLK, with the notion that by spring 2024 we're going to see a bounce in case of the hard landing, and for the soft landing we're going to see sideways movement, best case, and 15% down at the at the worst, and we go back bounce after August 2023. So that's XLK. Now we're going to talk about today XBI. So XBI is a overall equal weight. I mean, most of this this is a conglomeration of different stocks, close to around 150 stocks, I believe, in the S&P sector, with a very small to a 1.2%, 1.3% to around even 0.3% weightage of different stocks, such as bio stocks, such as Biogen, Gilead, Amgen, etc. So all these stocks actually have a lot of R&D go into that. So the value of these stocks, generally the S&P value, the median S&P multiple is 15x, 15.5x, but obviously it rarely stays on 15.5x, except that the 1970 period of 8 to 7 multiple, but most of the time it travels between 16 to 20. Whenever it's 2021 there's a correction, whenever it's around try to get back to 15, and then again it picks up. Whereas in case of XBI, you can see a lot of value at this point, right? And you can basically buy most of the stocks within this range of 10 to 12, 13 multiple. Some like exceptions, but like Amgen, for example, is a good example. Like if you look at their forward PE, it is although it looks like an expensive stock at this point because it actually moved up quite a bit in the last few weeks or so, but it's still trading at 12-13 multiple, and it is projected to grow earning 15-20% in the next couple of years, and the PE will still with the PE range, even with the target price $100, $150 above current range of the Amgen, like around right now it's trading around 300, but it can go up to 550 in next 2 years, but it still has a pretty reasonable multiple of 13x, 13 to 14x in 2 years. So overall, the bio stocks, if you look at it, they actually really thrive based on the FDA approval of the drugs, and when that happens, the stocks pop quite a bit, and because of this, the pop really is a very high magnitude. So usually it will also bring this XBI up with every biosector, top bio, pharma, not pharma, the biotech industry is these companies, whenever they make a like a good invention or FDA approval. On the other hand, another tailwind for them is that a lot of cases the small sectors in the Biogen are actually bought by the small sector in the biotech industry, are bought by the big pharma, which are in this XHB, the home sector, the healthcare sector of this S&P, where the companies like Mark or Pfizer, the guys at Eli Lilly, they make acquisition of these small bio companies, and then this bio stocks goes up and XBI goes up. So that's kind of the fundamental of the bio sector and XBI. So look at the chart. So here we have the chart since 2013, I believe 2012, and this is the trend line, that the secular bull trend line. You can see that we have a multiple correction, one here in 2013, then 2014, 2015, 16, 19, multiple times. And the COVID has this is the COVID low. The COVID low, obviously every sector, every stock went down in the COVID, during the COVID. 62 was a bottom, and then again it picked up, and again see that it corrected itself and went back. There's a double bottom formation that happened for the biosector in June, right? On May 12th, I believe that's when it hit that 62 level, the XBI. At the time the Biogen was selling for $180 and so on. It seemed like that the hell is breaking loose. But guess what, like other stocks, when it's really the fear factor comes in, when it seems like that everything actually the world is going to end, and then people start buying in. And similar thing happened here, right? In technical analysis, this bottom formation is a very, very important, right? It's like you have a double bottom, means that you visited the bottom, and then we almost always bounce up from there, and that is and then after a while, depending on the demand and supply, there will be another correction. So that's what happened here. It bounced off at the trend line again in this around this zone in 2028. It was very high. Everything was like the Trump era, peak of the Trump era, when everything went up, and then with the Fed raising interest rate, there's a valuation correction. So along with everything, it went down here again. It tried to reach that breach this near-term resistance, where it actually you can see that after this 2018 correction, multiple times it got this resistance at this line. So this formed this resistance line. So here we again revisited this, and you follow this trend line. If you look at how many times this trend line got touched, it was like probably around 8 to 10 times in the last 10 years or so. So then we won here in 2018, COVID low, 2020, then again in 2020, like 515, 512, 2022. So within the last 4 years, 3 times we visited this bottom. We did not breach this level as 61, and since then we are in this upward trend. So unlike the other sectors, I am really bullish about this particular sector, XBI. So currently, we are following this bull trend, that now new bull trend has formed since this 512 lows, and since then we have seen that Biogen had this breakout. It was trading around 200 and 220 level for about a couple of years. It broke out with this Alzheimer's or drugs approval. Then Gilead actually also broke out above 75. Amgen, it broke out, and it's actually making new high all the last few weeks. Then again, Moderna is one of the new addition here, which is which really it got corrected again. It was a $400 stock during the COVID days, and it got the bottom at $120, and it actually kind of a bottoming process completed. It is back at 160. Pfizer has a partnership with the Moderna for a cancer drug, and then Cardigan, and then Regeneron, ABV. Is all these stocks are really good value stocks, good balance sheet, strong research portfolio, and lot of things in the pipeline. And from the technical perspective, there are 3 different bottom formation already happened. It is actually following a bull trend, and I expect this to continue for the next few months. Now, what is the downside, right? So that's kind of the bull case, that XBI is going to continue to follow this uptrend until this current uptrend intersects with the long-term uptrend, and then there will be some resistance, and it exactly intersects at the time when we have this periodic resistance. This near-term resistance will be formed around this level of 84. Guess what? We are right now around 84. So I think this blue line, sorry, this is the blue line right now, 84 and 96. That's where we're going to see this resistance. So from the 84 to 96, I expect till it goes sideways, it will probably go back to 70 somewhere at 75, 76, and back again. So it's going to probably go down sideways here, and then in the next 3 quarters, maybe end of first half or around beginning of third quarter in 2023, we are going to hit this resistance. Maybe just before that we're going to go past it, but I'll expect that it's to consolidate around this 96 level before some event, either it's an economic event or it's it's an industry event, like some big acquisitions or some big drug approval, some sort of catalyst that will move it further up the upside towards this 50% Fibonacci retracement. So what is this particular green line? If you look at the bottom, that bottom considering the COVID low, where we also already reached, met that low a couple of times in 2018, as I mentioned earlier, as well as 2022. So that's the low of the Fibonacci bottom, and the top is when this particular sector it reached its peak when all this bio stock was like much higher than the current level. Different than the healthcare sector. Healthcare is making new highs right now, and very small room to grow from here for the healthcare sector. The stocks are the kinds of the Pfizer's, and Pfizer is still I think it's a good shape, but there are other stocks in that sector like United Health, like the Mark and others. There we are already kind of reached the peak. There will be, I don't expect the big correction, but it is going to go move sideways. Whereas in this particular sector, the peak was formed about 2022 January, right? Or February. So that is your peak for the Fibonacci, and then your bottom is your COVID low, and the 50% is right here at 119. I expect it is to move to that 50% level. Taking a very conservative approach, it is going to go there by 2024. Now, why I'm saying 2024? Why you have to wait so long from going from $80 right now to 120? Because it's a macro situation. Every time we are going to see a 5% bump in the stock, we are going to see a 5% retracement in another month or so. So we are going to move slow, like that slippery slope sort of a scenario. But nevertheless, unless the other stocks, other sectors which are going to form new lows in the next 1 year, it is almost 100% certainty given the charts. This sector has already bottomed, not once, not twice, but 3 times, right at the COVID low to the penny level. So my strong, my strong belief, I could say, is that this stock has bottomed and it is going to go uptrend. It is not going to go up like a 30% in a month or so, because that is not how it is for this particular environment and this sector. It is going to move slightly sideways, steadily but surely in the next 1.5 years. Now the best case scenario here is, again, from now to there, it's about 44% upside. I think it's going to get there, but not right away. It's going to probably follow this trend line. It is sometime around 2024 when we get it all clear, no deep, coming out of the deep recession. Then you're probably going to be seeing the movement, but I don't expect that it's to move up right away because we are in the slow growth environment. Given that the inflation is going to stay where it is today, at least the 4%, 3.5-4% level, and the interest rate for the Fed is going to be staying around this 5% level for a long period of time. So the money is not free. So growth is not guaranteed. We're going to have a slow growth because these companies need a lot of capex to do the research is doing along with the human capital. So the earning will not going to be super crazy. It is going to be through the acquisition. The stock appreciation will be through buybacks, acquisitions, and as well as the slow the earning catalyst coming from the general uptrend, bull trend from the bio sector. So this is my take here. So if you have to buy one sector, like if you have let's say $8,000 to invest or $80,000 to invest, or $160,000 to invest. If you have the one sector to buy, this is not a good advice to actually just put all the money in the one sector, but let's say hypothetically you would put all your money in one sector in stock, right? I would put biotech on